Hey Nerd Nation, it's Denise Donahue, your favorite mortgage nerd. Today is Thursday, it is September 13th, and it is Mortgage Nerd News time. You guys know every single week I share with you guys what's going on with the bond market, which tells us what's going on with interest rates. For those of you that are in the market or you have friends or family that are in the market, make sure you share this video. We want everybody to stay informed, be transparent, because it's so important. You don't just want the lowest interest rate when you go under contract or when you're getting pre-qualified. You want it before you actually close on your home, which is why you need a certified mortgage planner that monitors the bond market. And so fixed mortgage rates have an inverse relationship with our bond market. So I don't want to give you all the specifics. I don't expect you to be a mortgage nerd, but you want to be aware enough. And so what you're looking at on my screen right now is the bond market. And the price of a bond does fluctuate daily. It's kind of like the price of a stock. And that's what mortgage rates are tied to. And so the reason why mortgage rates go up and down is because the price of bonds goes up and down. And the three primary reasons why they move are unemployment numbers, GDP, and inflation. And so what you're looking at here basically looks at over the past 2 years. You can see if I highlight over here, November 8th, 2016, we see a big drop in the price of a bond, and that's when interest rates went up, because when price of bonds go down, interest rates go up. Then they mellowed out a little bit, and then this year happened. So here I'm hovering over January 8th, 2018. You can see the price of these bonds dipped again. They mellowed out a little bit, and then they dipped again. And I mean, you see that roller coaster. And so a lot of what's going on is our stock market's doing great, and it's not uncommon for our stocks and bonds to be performing opposite. So our interest rates are higher. If I zoom in on this over the last month, you can see that we've got a downward slope again, but today we've got a little bit of a recovery. I actually think we're going to recover a little bit more. That's because the CPI numbers came out. That stands for Consumer Price Index. And they came out better than what we were expecting. So we're starting to see that line come up a little bit. Today may be a good day to lock if you are in the home shopping, part of your experience. So if you look at my website, or if you're looking on my website, you'll see that every single week we post what the current mortgage rates are doing. So you'll see that as of today, the 30-year fixed rates are here. And then what's really neat is Sam, the chief economist at Freddie Mac, gives a little blurb. And what I thought was interesting is you'll see here that the mortgage rates are currently 0.082% higher than when they were a year ago. And so they are expecting that rates are going to continue to go up. We knew that they were going to continue to go up. It's still a great time to buy a home. Mortgage interest is considered good debt because it's tax deductible. So don't let that discourage you from pulling the trigger on buying, because I can assure you, when you buy a home versus renting, you are 44 times, they say you have 44 times the net worth of owning than you do renting, because you can write off a bunch of stuff, your home appreciates in value, and all that good stuff. So thank you for tuning in. Be sure to subscribe if you're on my YouTube channel. Share this if you're watching it on Facebook. As always, thanks for tuning in. I will see you guys next week. Y'all take care. If you need me, you know how to get a hold of me, 972-447-NERD. Bye.